Hello and welcome to Business Incorporated live on Channels Television. Well, we still see the trading month of March still moving along. Here are the top stories right now. As the conflict between the U.S. and Iran intensifies, ordinary travelers are caught in the crossfire. We'll take a closer look at Middle East tourism. And after a sharp pullback, gold is shining again. Investors are rushing back into safe haven assets as geopolitical tensions flare. And now we see Nigeria's private sector sending a strong signal. Business confidence surged to a record 117.2 points. And it's great to have you join us. I'm Ladi Williams. Let's get a quick check on what's playing out with the markets now. And definitely we're seeing oil prices are surging again, extending sharp gains for a third straight session as escalating tensions between the United States and Israel and Iran keep global supply risk firmly in focus. At last check, we're seeing Brent crude futures. That's up 3.11%, $83.70 a barrel. Fantastic for government revenue, but we're feeling the pinch at the pumps when we try and buy fuel. Definitely feedstock going up there. WTI crude, 76.49, 2.66% up there. We see natural gas. That's sitting at 0.36%. Still joining the energy rally at this point, even though we see gas was trying to go down before now, but we're seeing that whole energy rally taking that up also. Let's get a check on metals now. Gold is back on the rise after a sharp sell-off as investors, they're reassessing the safe haven demand, amid escalating tensions between the United States and Iran, even as the US dollar strengthens. So we see for gold, the safe haven trade, they're back up again after that pullback we saw yesterday. Gold was up about 2%. To about $5,192 an ounce, while U.S. gold futures gained about 1.6% to trade above $5,200. The rebound follows a steep 4.5% drop on Tuesday when a surge in the dollar, rising U.S. Treasury yields, that pressured the precious metal, and it's all green there with the biggest mover today. That's platinum. 5.15%, $2,182 per ounce, and we see spot gold and spot silver. Spot silver also gained about 3.76%, not bad. Maybe we'll see another run to $90 per ounce. All right, let's get a check on other stories now. Right here, Nigeria's business climate is showing, some strength with the business confidence index climbing to a record 117.2 points, even though this is lagging data, up sharply from January and signaling, broad-based expansion across major sectors, including manufacturing, trade and services. That's according to data from the NESG. Economists say the surge reflects recovering demand, improved performance, and rising optimism among firms, a key indicator of growth of the private sector momentum, heading into the second quarter. The continent's entrepreneurial spirit is on full display as Africa's Business Hero Summit gets underway in Kigali, Rwanda, celebrating Africa's most innovative business leaders and change makers. Powered by Alibaba Philanthropy and the Jack Ma Foundation, the event has drawn a record-breaking 32,000 applications from startups across diverse sectors like agriculture, health, fintech, and climate innovation, highlighting the growing confidence and impact of African entrepreneurship. Finalists will showcase bold solutions aimed at transforming local economies and creating jobs continent-wide. I see South African retailer Woolworths Holdings reported a solid rise in earnings, lifted by strong festive season and Black Friday demand across its premium food and fashion segment. Headline earnings climbed nearly about 1% for the half year to December 28, with group turnover up more than 5 billion rand. Despite challenges in both South African and Australian markets, the company's performance underscores resilient consumer spending in key retail categories. And still in South Africa, South Africa is urging Africa to shift from resource exports to move beyond simply exporting its natural resources and instead create value from the vast energy endowment. Speaking at the 2026 Energy Indaba, the president emphasized that affordable and reliable electricity must drive human development, lower the cost of doing business, and strengthen public services. Take a listen.
built in various nodes on our continent. It was just to extract those products that were needed and to cut them off to other locales in the world. Power systems were developed around enclaves of production rather than around broad-based development for the area and for the country. This legacy still influences the geography of opportunity on our continent. It explains why, even where resources exist, the systems required to translate resources into prosperity have remained uneven. The task now is to build a different kind of system, one that connects Africa to itself and one that allows our economies to grow together rather than apart, and much worse, rather than on their own on an insular basis. The African Union's Agenda 2063 recognizes that Africa's development must rest on modern infrastructure.
Right, the ongoing geopolitical conflict involving the United States, Israel, and Iran that's triggered by military strikes and rapid escalation around the Strait of Merz is reshaping global markets and economic expectations in sectors like real estate and construction, which rely heavily on imports for building materials and machinery and on stable economic conditions. The fallout could affect financing costs, project timelines, supply chains, and investor confidence. Against this backdrop, Nigerian businesses are increasingly exploring strategies to hedge risk and maintain, resilience. Join me now for this conversation. We have Dr. Oyeleke Ajiboye, is the MD, CEO, Efficacy Development PLC, and is joining me right here in the studio. Great to have you, sir. Good afternoon. Definitely tension, in the air right now. And, yesterday was quite interesting that we saw the safe haven trade it was a big sell-off for gold and the safe havens. Normally investors would be like, okay, you know what, this is not the time to take risks. And I'm sure businesses here are also gauging what's playing out so far. In your view, what is this looking like for Nigerian businesses? How are you guys thinking around what's going on?
Okay. On this war, American-Israel-Iran war, what I've tried to do in the last couple of weeks is to averagely spend an hour looking at what is happening. I don't want to be reactive, just like the COVID time. I want to be ahead of the game. And I also see a lot of opportunities for Nigerian businesses here. I just hope we don't get involved in the war. I was in the news recently, footballers leaving Saudi Arabia, they are going. The rich guys are going. Some of them will be considering coming to Nigeria. Yeah. So that is business. Oil is going up, so government is going to have more money. They can do more infrastructures, spending government. Actually, government is the largest spender in any country. When there is a recession, it starts from the government. So when government has more money, it's going to trickle down to every sector, everywhere. So I see a lot of opportunities. I don't see any negative. While I don't want the war.
It's like a double-edged sword.
It's a double-edged
when it comes to the oil prices.
Yes.
We're already feeling the pinch at the pump.
At the pump,
right.
Yes.
Even though government is getting more money.
Well, government is going to get more money. What I think the government will now have to do is to sit down and create a policy to subsidize some things. Because when you're making more money here and another private sector organization is taking part of it from the common man, then it doesn't balance out.
Right.
They could actually discount, maybe interest rate can keep coming down for now. Discounts, educational fees, airport fees, things that everybody can have a feel about. Just discount prices here and there. And I think
and there are already fears that this could actually stoke inflation, with energy prices going up at this time. And obviously, we know the central banks would react. And they'll try to keep interest rates elevated. So the risks are there. But looking at your industry at this point, it's already really expensive right now. if you're trying to buy a home or
It's really
build,
expensive, yeah.
it's very expensive. So is this going to add, is this salt on the injury
Well,
to a market that's already so expensive?
It could actually be, but I also see another angle to it. Because presently, most of the things we import from China, from Turkey, the waters too will be threatened. Cargoes will be afraid of moving around and all that. So what I think here is if our country is prepared and we are proactive, some of these companies who want to sell, they don't want to just be caged in China. You could actually see that their manufacturing and productivity, export is beginning to go down. They could actually come in here, partner with companies in Nigeria, buy into stakes into some of our companies, bring their technology, and we are still in business. Yeah, as much as possible, some of the basic items we use for construction, apart from the very luxury ones, are still locally manufactured in Nigeria. We have tiles, cement, reinforcement, WCs. When we are looking out for the luxury ones, let them also come. It could actually be an opportunity for our government to attract these manufacturers, investors to actually come into the country.
Right, and definitely we all should be hedging,
Yes,
in some type of way, even the government, at this time. For you, as a business, in that industry, you definitely enjoyed, Naira stability.
Yes.
In 2025.
Yes.
And we're seeing, some weakness right now, even though we're still sub 1.4 to the dollar.
1.4.
Are you getting nervous about the Naira?
Well, I could get nervous about the Naira. But if oil prices keeps going up, I think we would be having a good advantage. Naira will have a very strong edge. And at the end of the day, and looking at it also, we'll be having more foreigners coming into the country. So there'll be more influx of revenue. People will be becoming more safer in Nigeria if Nigeria stays neutral. Let me use that word.
All right, let's be a safe haven.
Let's be a safe haven.
At this point.
So we should not join issues.
Okay, so, looking at 2026, Q1, that's ending, so far. March is, starting off very hot.
Very hot.
And, giving us some kind of indication into what to expect for the second quarter of 2026. What trends have you seen so far in Nigeria's real estate industry? Are you seeing, light at the end of the tunnel?
Okay,
somehow?
So in the Nigerian real estate sector, like I said, I'm trying to play this year like a COVID year. COVID, all these things started just about March 2020. This is starting about March 2026.
Interesting.
So I'm trying to get myself ready and look at the sector. 2025, real estate was a year that everything started adjusting and then people beginning to have more faith in the sector. Why? There have been a lot of reforms. Some people have been burnt and all of that. But now we are beginning to see things being done the proper way. And then authorities are being challenged. Nobody can just take anybody for a ride. Yeah, in the sector. Now, when you look at the buyers are they able to afford? There are other platforms for mortgage now, MREIF, NHF. There are options for people to buy and own houses. That is there. For the developers, plan is not so good because of inflation. You can actually burn your fingers if you don't have a very good financial backup or plan in place. So for buyers market, it's still a very, very strong buyers market. For me, I see a lot of people, whether the war comes up or not, there's growth. There is growth. It now depends on where you want to channel your energy, what kind of real estate you want to invest in, and all of that. So
right.
I'm still very, very positive.
Okay, so positivity, that's good. Having an optimistic mindset, around times like this.
That's on my own.
That's on your end, at this point. But definitely looking at the market at this point, there's still an affordability issue.
Oh, there's no affordable housing.
Exactly.
So if that's where you want to talk
even
about.
If you're getting the mortgage,
it's
you're
not
gonna
affordable.
have to pay a lot. With interest rates and all of that.
Well, I don't think there's.
Where's the sucker there for us?
There's no affordable housing again. Let's forget about that. If there will be anything affordable, it has to come from the government. The government has to be the pioneer because.
But why isn't the government flooding the cities with houses, with homes?
I think the government, they need to sit down, and we've not seen any of the renewed hope projects in Lagos. We need to see that coming up. Very, very affordable. There should be requirements for people that will qualify for it. Because if you also bring it out for 20 million, one big man can buy 210 units and still sell it up. So all of these policies, I think we need to sit down very well. But I also see opportunities around it because why people cluster and live in a place is because of infrastructure. So with the coastal road that is under construction, the government can actually go and build affordable housing somewhere on that axis towards Ogun State. It can even be towards Ondo State, provide rail or BRT. So if somebody can live in Ijebu Waterside, land there is very cheap, is strong, and then you give them BRT from there to come to the island. And there's 1 hour on the coastal road, or 1.5 hours. They are better off, and the house is cheap. These are initiatives I think government can go into. Because other than that, you can't get affordable housing in Ikeja, in Lekki, and there's nothing affordable. So if you want to help the populace of people that are working in a big city like Lagos, about 25 million population, and this is where the economy of Nigeria stems from, apart from other revenues from oil. This is it, is in Lagos. So we should be able to look at those outskirts, create access, infrastructure. You can concession it. Let people bring their BRT buses. Let companies be given conditions to build the houses, affordable bungalows, apartments. I'm sure a lot of people will be happy.
To be nice to be able to live in the outskirts and still work in the city. That'd be really nice. Cool.
You have
go
fresh
cool
air,
your head over there after the hustle and bustle.
As long as it's infrastructure. And if
all right, thank you so much. Always great, having your perspective, Dr. Oyeleke Ajiboye, MD CEO, Efficacy Development Bureau. Thank you for coming on today.
Thank you, sir. Thank you.
All right, let's head straight to the markets now. Let's see what's happening on the African continent, and definitely it's still the same old move from the NGX at this point, still continuing in the green, even though it's still volatile globally right now with major indexes and the few trading days of March looking very hot. But we see the likes of MTN Nigeria getting buy attention. Insurance stocks also gaining at intraday, just like yesterday's close. Now we see the Johannesburg Stock Exchange 1.67% higher, 121,960 points. Did touch 122 at some point. Flip over to other parts. There's still pressure in North Africa with the EGX 30 representing that 0.21% down, 46,627 points. And the Nairobi Stock Exchange also we see sell-offs there. Yesterday, 212 points. Let's get a check on the Gulf region now. Stocks in Dubai, Abu Dhabi tumbled today as markets reopened after a 2-day halt, following Iran's unprecedented wave of missile and drone attacks on the Gulf nation on Sunday. Dubai's main share index, that slid by 4.17%. That's the biggest drop since May 2022. And broad-based declines led by blue chip developer, that's Emma Properties, that's Emar. It opened new tabs for a drop there. Air Arabia also on that index dropping to 3.29% for the Abu Dhabi index. For other parts, Saudi Arabia's benchmark, as a 30, that opened about 1%, over 1% high, about 2% to extend previous session gains, led by an increase of about 0.9% in Al Raji Bank, while petrochemical maker Saudi Basic Industry Core, that also trimmed early gains to trade about 1.2%, although the company swung into a massive net loss in 2025. For Qatar, 0.81%. We see the likes of Qatar Islamic Bank rising about 1.1%, but we see industries, Qatar, that fell about 1.3% right there. So that was a picture right there in the Middle East, still with tension. Right there, we see some profit taken. Then the stock futures, they rose today after being hammered yesterday, hinting to a tentative recovery after a volatile previous session. And we see the Dow Jones Industrial Average 0.20% up. Tech-heavy Nasdaq after a big fall yesterday, 0.38%. So we're seeing recovery right there. But Asia is a different picture in Asia. Looking at the markets, there are big sell-off. South Korea's Kospi plunged to a record. Its worst single-day decline, extending a steep sell-off from previous sessions amid a broader fall in Asia markets. There's an escalating war in the Middle East. That's denting investor sentiment. 12.06%. Biggest single day fall for the Kospi there in South Korea. 5,093 points. A lot of profit taking. Hang Seng 2.01% down. Let's flip over to other parts of Asia now. And the Nifty 50 wasn't left out. A big 1.55% drop for the close, 24,480 points. Let's head on to Berlin now. We have Lars Holter right there, but we're staying on the topic of the war in Iran, but also we're trying to get a feedback there. Friedrich Merz did meet with President Donald Trump yesterday. Great to have you, Lars, but word on the street is it wasn't a very confident meeting, from the minister's side. How are you seeing that?
Yes, Ladi, that's definitely something you can say. It is, in fact, really hard to say if the trip was worth it at all. Of course, Chancellor Merz had scheduled his visit with Trump way before the crisis in the Middle East escalated. He wanted to talk about trade and tariffs. But considering what's going on now, and especially considering that the press conference with Merz was actually Trump's first public event since the attacks on Iran started, it was clear from the get-go that Iran and only Iran would be what Trump would be talking about. Trade talk, apparently, there was a bit behind closed doors. Apparently, the topic was touched on over lunch, with Merz mentioning that he would like to see tariffs lowered and Trump joking that he should actually raise them on Germany. As far as we heard after the meeting, there was nothing tangible, no news really. So I guess one could say the whole visit was a bit of a disappointment, with the German chancellor being sidelined by geopolitical events much more pressing than U.S.-European trade relations.
All right, so 5 days after the U.S. and Israel launched their attacks on Iran, there are still tourists, stuck in that area. What can you tell us about, tourism in the Middle East so far?
Yeah, Ladi, parts of the Middle East have become quite popular tourist spots for European travelers, with numbers rising strongly over the past few years, with the United Arab Emirates, Qatar, and Oman being especially popular. And while that was a lucrative field for the travel industry, it is going to cost them now. Looking at just German tourists, here's an example. When the attacks against Iran started, tens of thousands were vacationing in the Middle East, and an estimated 30,000 got stuck at their destinations when not only their flights were canceled, but when all air traffic had to be halted over the past weekend. And we heard from a German couple that had already checked in their luggage and boarded a plane and was pretty much on the way out. When the flight was canceled, they had to get back into the city, find a new hotel in Dubai. There was in this particular case, and basically just had to sit tight. They were eventually flown out, of course, but it took the airlines a lot of time and effort to get to all these travelers, and many of them, as far as I understand, are actually still there.
So how important is the Middle East for the tourism business?
Oh, it's certainly not the biggest market, but besides the tens of thousands of tourists vacationing in the Emirates, for example, there are also lots of businessmen and women. And not to forget, the airports of Dubai, Abu Dhabi, and Doha are also major hubs. So hundreds of thousands are connecting there on longer flights from Europe to anywhere in Asia or Australia. Around 500,000 passengers are actually flying through these three hubs that I just named. But then you can calculate the same amount for the other airports nearby, who are basically all out of service too when their routes to the three main hubs had to be canceled. Now, how big is this all for the tourism industry? It would certainly be something they could stomach if it weren't for other crises going on at the same time. Travel to the U.S. is far down, as many Europeans are more or less boycotting the U.S. under President Trump, or fear that they might encounter problems at customs there. Then we're also seeing a pretty weak economy still in Germany, so people are also spending less money on travel. All in all, the tourism sector has seen better times.
Yeah, definitely. We'll keep tracking that industry. Thank you so much, Lars Holter, for the details from Europe. Thank you.
Thank you, Ladi.
All right, let's get a check on other markets at this point. And surprisingly, Bitcoin making quite the recovery today, 0.18%, crossing over $70,000 per coin. And we see Ethereum did try to stay above $2,000, but we'll see a pullback there, about 0.8%. BNB, $650 there. Mostly red. on the other half of the screen. That's for most of the altcoins, but Bitcoin solidly in the green. Then we see some stable coins also in the green. So it's a mixed bag for the crypto market right there. Let's look at some top stories now. Ripple, they've announced a significant expansion of its enterprise payment solution, Ripple Payments. The company announced that it offers an end-to-end stablecoin infrastructure by integrating custody, virtual accounts, and a combined fiat plus stablecoin payment channel into the platform. According to Ripple, the platform is currently active in more than 60 markets and has processed over $100 billion in transaction volume to date. Then I would say the political battle around cryptocurrencies, that's intensifying in Washington. President Trump is urging Congress to accelerate the adoption of a structuring legislation for digital assets. His statement comes amid growing tensions between the crypto industry and major banks in the U.S. According to analysts, the latter are trying to influence the rules governing stablecoins as well as the structure of the crypto market. So, and we see ARK adds Coinbase, Robinhood as crypto shares tumble. So with the big sell-offs we've seen so far, we see Cathie Wood's ARK there, putting more money right there in most of the crypto-related stocks like Robinhood and Coinbase at this time. So that's the picture for the markets today. Some markets, some asset classes doing well, some are still struggling at this point, but that's Business Incorporated today. Thanks so much for watching. I'm Larry Williams. I'll be back again tomorrow. Bye.